What's up, guys? Welcome back to another episode here of the Block Hash podcast. Today, I have another wonderful, fantastic guest, David, founder of Galileo FX, a fully automated trading software helping to analyze markets and execute trades for traders. We're going to dive into a little bit of what Galileo does and what makes them unique and special, as well as what's going on in markets today from the expert himself, David, who is on the show. David, welcome, man. How you doing?
Thanks, Brandon. How you doing? I'm pretty good, thanks.
I'm doing pretty good. It's been a wild start to the year for sure, and the first quarter of this year, a lot has been going on. I'm sure, as someone that plays around in these markets as well and analyzes things, also sees what's going on. So yeah, it's been wild, but it's been good.
Yeah, I mean it's a lot of uncertainty in the markets, but you have to look at it the right point of view. The more uncertain it is, the more opportunities are there, right? I remember a few years ago when I started in this business. 10, 15 years ago, markets were just going up. It was as boring as hell. And traders, they had just like one or two strategies that they could use. Right now, it's the opposite of that. You have even too much activity, political implications, announcements and wars and, geopolitical shifts, trying to go out of globalization. So all these different things that create a lot of uncertainty, right? We're seeing it right now. For people listening, even in the future, I mean, the markets now, it's the second day, they're crashing like crazy. Dow Jones is like -4, 5%. You rarely see this, right? I've been watching the markets for many, many, many years, every day, all day, basically. And you rarely see like a couple of, 2 consecutive days or even one day where you have this, like everything is red, from oil to, European indexes, crypto, gold. Even gold was red. I mean, everything was red because it's also, psychological, psychological reaction to things that are happening and to uncertainty. We can get into the technical side, but it's basically, in the short term, it's a lot of emotions going on. Even institutional investors, you won't believe it, but they're still humans, right? The people managing these huge portfolios, they're still humans. So it's easy to get scared, like when you see these kind of, downward movements in the market.
Yeah, it's never fun when you're in a period in the market when it's moving in such an uncertain pace. Like I'd rather the market either be, really good and bullish or really bad and bearish, because at least I know where I'm at and what's going on. When it's, moving in this weird kind of, sideways trajectory where everything is kind of just in the tank all at the same time, it's really hard to get a good grasp of the market, and makes it very uncertain, but it gives a lot of anxiety, especially for a lot of traders. And it's like, is it going to go up, is it going to go down, what's going on?
Yeah, but you cannot afford anxiety, right? You cannot afford anxiety. I mean, we have to be serious. If you want to do investing and you want to make money out of it, we have to be serious. So you need discipline, and you cannot afford just anxiety, just something that goes against you. Why would you let it, even? I know it's really hard, but you can. Anybody can learn to control their own feelings. I learned to do it. It takes some time. It takes some practice. It's not pleasant because you have to, go through all these feelings and, accept that they're wrong and then try to not feel. But, the CIA, they train people to resist torture. I mean, if people can learn to resist torture, that's like physical pain, extreme physical pain, right? And they still resist. They don't talk, right? They don't say anything about the secret stuff. If humans can learn that, we can learn, guys, how to manage emotions in trading. It's not even the hardest thing that we have to do, right? So definitely, but yeah, I understand, you have to look at it rationally, right? It's more opportunities, it's more risk. But but you have more risk, you have more rewards. And you can make a lot of money when markets go down with shorting. Actually, a lot of traders that I knew over the years, they make more money when the market goes down or it's volatile like these compared to when it's just going up. Because when it's going up, you just, what you're going to do? The only thing you can do is just long-term investing. You don't touch it, you buy it, and you don't touch it. But if prices are fluctuating like quickly, and you're constantly going up and down, you have all these smaller opportunities, and you can take advantage of smaller price fluctuations. Instead of just doing one trade a year, like long-term investing, you can do like these people, they do like 100 trades a day. Okay, I'm not going to say that I'm not saying that we should do like 100 trades a day, okay? But you get the idea, right? There are different ways of making money. There are a million ways to make money in the stock market and a billion ways to lose money in the stock market and in trading. So, but it's not just one single, magical strategy that is gonna, that works for everyone. That's also the beauty of it, right? You can try different things and see what works for you, right? You can try trading manually. You can invest, in bonds. The most boring thing you can do. You're not gonna make any money out of it, right? Because you're just keeping up with inflation. That's what you're really doing, right? You're not making any return from bonds or this like safe haven. But you have stability and you can sleep well at night, right? You're not gonna have any surprise. With other things like crypto or aggressive trading or meme stocks or even the Magnificent Seven stocks, these tech stocks, it's another kind of game, right? For some people, they actually can win at that game. Other people can win at another game. So you just find what works for you. You try different things. It's like anything in life, right? Ideally, you would like to live in different places in your 20s, maybe, right? Different countries, even different continents. And then you choose what's good, where you feel good, when you like it, at least it's like a choice that you made, right? It's not just random that you were born in a place and you live there all your life. So it's a little bit like everything, like partners. You're gonna, you're telling me you just marry the first person, you date? No. So you're gonna, but eventually you're gonna find the right person because throughout the process, you learn, what works for you, what are the limits for you. And it's exactly the same, in investing and in trading. So there is no one magical asset that you need to buy now. There's no one magical strategy that you need to use now. That's not how it works. Warren Buffett, he has been using the same strategies like for decades, like for 50 years. It still works. Some strategies after 9 months, they get so overused that they stop working. So they have it's called like a alpha decay. So basically a trading strategy, the more people use it and more it's used in the market every day, the less effective it is, right? So it's the same strategy, but it gets less effective as more people use it. But other strategies, they are like forever. You can use them forever. So that's really what you need to know, what you need to be smart about, and other things as well. But this would be and take it rationally. Don't take it. Okay, I need to do this. I'm gonna try different things, and then I'm gonna come up with my own conclusions. But don't try, you have to plan it well. You know what I mean? You have to plan it and stick to the plan and have the discipline, even if it's uncomfortable, even if this strategy would never work, right? Or it's a hopeless strategy, or it's a hopeless tool, or an hopeless crypto coin. Maybe that's the one. You know how many times I'm super sure that this is something, this will never work. And then it works, right? Because it's counterintuitive. It's not something that you can expect to catch, right? But you can look at the results. You can do something and then you see what happens. And maybe, right, you find something that, so it's not about ego. Ego, you should leave it at the door. It's not about, making mistakes, or I should be, feel sad about myself because I made a mistake. That's BS. That's, not, we're talking about action here. Action. Action is more important than words in trading.
Absolutely. Discipline and patience, I think, is the best strategy overall, because it's hard to come by in humans. It's easier to program patience and stability. Patience and discipline. I mean, actually, one of the best advice I ever got as an investor was to always find a way to extrapolate away your emotion. You talked about this a little bit earlier, but the biggest mistakes always come investing when you get emotional about something. You get too high on something, too low on something. You abandon your strategy, and that's why a lot of strategies fail.
It's guys, it's natural. It's natural for everyone, even the top investors. Yes, we share 99 point something percent DNA. It's for even the best investors. They make mistakes like that because that's how we are, right? We shouldn't, deny it. But never fall in love with a stock. Never fall in love with a crypto coin or with your strategy. Just look at the results. That's really what matters in trading. Who cares, right? That's what I tell people, right? The only thing that matters is when you buy and when you sell, or Opposite when you sell and when you buy, right? That's the only thing that matters. Then if you do it, you buy year one and you sell after 15 years, fine. You made money, good for you. You sell and you buy and you sell after 10 seconds, good. It's still good, right? So it's not that, oh, day trading is bad, longer term investing it's for old people, or no. You just, it's for different, kind of people. We are different. Some people, they do these extreme sports. Other people, they don't even do any kind of physical activity, and they sleep on their bed. So we have different people with different, personalities, and that's the message really here, right? If you see that something is too hard for you, the strategy is too hard, or holding these coins when they go down like 50% is too hard, it's too much taxing on your emotions, then maybe that strategy is not good for you, right? Then you should keep looking. And then you're going to find something and say, wow, this is good for me, right? Maybe, yes, it's not the most profitable, but I like, these, and I like this other thing. Maybe I can replicate the same strategy across, 10 different assets, or, it makes me sleep well at night, or whatever. Or if I'm a high risk person, it's extremely risky, but also it makes a lot of money when it's right? So depends. Some people, they like the rush and the adrenaline, and they're here like to risk in a small amount of money with even small chances of making a high amount of money. Even if they know that the odds are against them, they're okay with it, right? But some other people, they will never be okay with it, right? They will never accept, oh, I have a 90% chance of losing all my money. They will say, oh my God, no, I don't want to do this. Other people will jump on it because, wow, you say, wow, if this 90% possibility of loss, it means that I also have like an even higher probably chance, if the return is going to be 10% chance, but the potential return is going to be super high, because the higher, the potential for losses usually, and the higher potential reward. So that's why bonds, they are like low risk and low return. So it's nothing special about it. Some people, they have, a good amount of money. They like to diversify. They like to be a little bolder with some of the money without risking their retirements funds. So you have to be smart about it. Don't do stupid things. I think that's, it's not about doing the right thing, but it's don't do stupid things. If you see something is too hard for you, choose something else. At the end of the day, you're judged by how much money you make. If you make a lot of money with a simple strategy, I would say you're a genius. It's not that I use the simple strategy. Who cares what strategies you use? Simple, complex, automated, manual. Nobody cares. The only thing is the money. In this business, you're judged by the money you make, right? And people get into the business because they want to make, they feel like they can play the game to make money, and they're smarter than the others, right?
Well, it seems like you have a lot of knowledge on this, and you really have dove into markets and developed quite a good ideology around how to approach it, and what you're building with Galileo is pretty incredible. How did your background kind of align with getting into investing in this sort of way? Like, what's your story kind of been like?
So after high school, I graduated in economics. So that was like my path from the beginning. I just had to pick what kind of finance and economics and business I wanted to do. It was I graduated from the university just in the middle of the great financial crisis. So 2008, 2012, that period, and no jobs. Like Europe was like, even I remember going to New York and wow, I never seen New York again. So desert, and so all these places for rent, and no signs like we hiring, not even one, and people jobless, lots of homeless. So you see that was the environment. So I said, I have nothing to lose, right? I'm not married. I have nothing to lose. I just went to Canada, right? From Italy. I'm originally from Italy, in Tuscany. I just moved to Canada with some savings that I had, things that I had, like working these small jobs. And why I went to Canada? Because I've been studying all this business stuff and this marketing stuff and everything, IT and technology. At the time, you could see that the US was really like 5 years like ahead of Europe. Imagine compared to other places. But even with Europe, it was like 5 years ahead. Now, it's getting thinner and thinner because knowledge spreads faster. Now, it's more like, it's more, now it's more, it's quicker to spread. But at the time, like all the best books, the best courses, the best stuff, the best products, they were coming from the US in the IT, thing. So I go to Canada and I'm looking for a job because, my savings in Toronto, cost of life is like New York, it's like LA, it's like San Francisco, it's crazy. Your savings are not going to last much, right? So I need to find a full-time job. And I had different offers, right? I was pretty lucky that I had different offers, one from an energy company, one from a video game company. But the third one was one from an advertising company. But the fourth one was from a trading software company. And I went to the website, I have to do the interview for this company. I said, wow, what does this, I don't even understand 1% of this. What is this? I never heard about it. I graduated in business and economics, right? So I did like 30 exams in finance and everything, but I never heard about this kind of day trading that you do with, proprietary trading that you do with this complex technology, like this server infrastructure and this stuff. Never heard about this. I said, wow. I need to get this job, right? It stimulates my curiosity. I need to understand this. The other stuff, energy, video games, not that much fun for me. So I got the job. I don't know how, but I got the job out of 100 people, and then I started my career like in the financial business. So it's like 15 years ago, and that was like the Wall Street of Canada, which is Bay Street. They have a really important stock exchange in Canada. So I stayed there like 8 years. I did my career, blah 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 blah. I was promoted, and at a certain time, I decided to resign, because it was maybe even too easy, and corporate life. Yes, I like it. I can, I have no problem with it. You put me in an office. It's like a fish in the water. It's the same for me. I have no problem in the office, cubicles, meeting rooms, and all this stuff. I even like it. But life is much more than that, right? You can't dedicate 40 years, 50 years. Even if you make a lot of money, I was making a lot of money. I was happy. I was being promoted. So it's not really about that, right? But it's about, there has to be more in life, about this. And that was exactly the time where I was talking to all these traders due to my job, right? And I was seeing the rise of automation and AI. And if I was looking right, I was seeing these traders trading manually, doing all things like they were doing in the 90s, even with the same kind of keyboards, ugly, the ugly, thick gray keyboards, really like, these guys, they were not trading from iMacs, the fancy, green or red iMac. They were trading from this really like ugly computers, because an ugly software, ugly everything, but they don't care, because it's about, how fast you get the data and how you trade, really. That's really how it is. So I was looking at these traders, they were still doing everything manually. Then I'm looking on other businesses, other industries, and I see the rise of automation. Now, don't get me wrong, the company was still using automation a lot, but it was using more like for matching trades or for automated trading system behind the back. It wasn't really used yet to make trades and to place these trades automatically. It was more something that they used in the background to do this, reconcilement of trades. At the end of the day, you have to do all this stuff, calculate all the commissions, blah, 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 blah. So they were using this kind of automation tools. But it was more like, business process automation. It wasn't really like trading automation. So I said, I'm going to resign. I'm going to start my own company because, listening to Jeff Bezos, he mentioned this theory about, remorse. When I'm going to be old, what's going to be the greatest remorse? That I didn't start my own business, or, that I didn't resign. And I said, I can't keep doing this, corporate stuff for 40 years and then retire and then have, the afterthought of say, oh, if I just did it, if I just started that business, I don't want to leave that. So it starts like that. It doesn't start with the goal of making more money. I was making a lot of money, right? So it wasn't really, I was living a great life. So I'm still living even better now, but it never was about the money. Okay. It was about something else, like a deeper need that can motivate you over many, many years and over many, many obstacles and many challenges, many, many problems, right? If your goal is just money, humans, they get demotivated after a short time, it's not that powerful motivator. Now, if you tell me I want money because I want respect or because I want to be, admired, that's another thing. Then the money is like the tool, and that's deeper, and that's gonna motivate you much more than just say, "Oh, I want to make $1 million because I want to buy, I don't know, Lamborghini, whatever." That's not that, at least for me and for the people who make millions that I've been knowing, it doesn't work. So it's really about being. I know it's you heard this 1,000 times, but it's you have to take it seriously, right? Because if you don't have passion, you're just gonna give up. That's the problem, right? Because it's a lot of obstacles. You see it with trading, right, or whatever. You're starting a business. It's hard, actually. Succeeding in trading and starting a successful startups, it's the same success rate, 5%. It's as the same thing as starting a successful company. So that's how you should approach trading, right? If you would start like a startup, you would take it seriously. The same rate of success you have it for trading and investing for retail traders, right? I'm not talking professional traders. I'm talking everyday people like us, right? In a sense. So that's really like my story. And I saw this thing. I said, human nature is that even these people, if they're used to do these things manually and they're a little close-minded, these traders, eventually they will appreciate the convenience of using automation, and they can go to the bathroom for a minute to do their thing, right? Because that was the situation. Like, these were day traders. They couldn't even go to the bathroom sometimes, and as much it was like active, the market, right? If they had like 5 to 10 open positions at the same time, like with the high stakes, and they're trading the money that wasn't there, right? So that's a lot of pressure, right? But with automation, you can remove a lot of the pressure, and you can use the time to make decisions and to choose which strategies you're gonna test, how you're gonna test them and track them. That's much better than just watching charts and waiting for the perfect moment. And you know how many people, at the right moment, they click the wrong button. And instead of buying, they sell, because you get, this anxiety, this really like, high pressure. I don't know how to call it because I don't have the medical background, but you get what I mean. You get this, so you're not like cold and, rational. And that's also why people make mistakes.
Absolutely. And, on top of it, and you mentioned automation, we're moving into an age where everything is automated. Most of the biggest hedge funds in the world, asset managers, they're all using automation. They're all using advanced algorithms. They've been using them for a while now. And if you look closely at a lot of different, high volatility, high volume charts, you can see a lot of that taking place. Just being reflected in a lot of the studies you can run. So like, it's very prevalent in the market today, and honestly, the only way to really keep up with it, I think, going into the future is to, adopt a strategy that involves automation. I've been reading a couple of really great books lately. One by Ray Dalio, another by James Rickards, called Money GPT. Has some really good stories in there.
I know both books.
Yeah,
those are great books. Yes.
And an interesting thing about automation is, it can be used in both good ways and bad ways. Obviously, there's a lot of national actors, private actors. There's hackers out there. There's people trying to break markets. Not that people haven't been trying to break markets for a long time, aka Soros, for example. But at the same time, it can allow you to compete and keep up with markets. And I think that's a great place where Galileo can come in here and give people a really good opportunity to keep up with these fast-paced, now automated and algorithmically driven markets. And would love to learn also a little bit, I'm sure the audience would too, how Galileo goes about doing that and what some of the functionality is behind it that allows a trader to take advantage of some of that automation.
Yes. So this is interesting because, we said it earlier. So trading strategies, if they're used by too many people, they get, they expire. They have an expiration date, which is really like very soon, like 9 months. At the same time, people, they have different styles. Like, we agree on this. They have different personalities. So you cannot do like a strategy that's the same for everyone. You can just, what kind of product is that? It's a really, I would never sell a robot that just does the same thing for everyone. I mean, it would be crazy, because I know these two things. Number one, the same strategy, if it's used by too many people, it becomes less effective. Number two, people have different tastes. So even if we publish it like a single algorithm that's the same for everyone, most people will not be happy, because they say, no, but it's too risky, or maybe no, but it's not aggressive. So how do you get out of this? My idea was, we create like a fundamental strategy, a fundamental algorithm that we test with randomized trades, like hundreds of thousands of trades in the last 2 years, different assets, and we need to get at least this amount % of success rate with totally randomized settings and strategies in the software, even the dumbest one, even the most stupid settings that you would never use, like, I don't know, 5 stop loss or whatever, like crazy settings. If I see that this percentage is consistently good, then I know that I have a foundation, that I have a foundational algorithm that it's working, right? Now, what we want to do is to make the algorithm so that different people can tweak it easily without like changing it completely, but like pointing it to the direction that they want to point it to, right? And you have almost unlimited directions. And we need to make this easy for people, because people, they don't buy a software like ours to become developers or to study like a 30-page manual. Nobody wants to do that, right? So you need to make it easy as possible for people to customize the robot, but at the same time, you need behind the interface, you need like the back end of the algorithm to be extremely good, as good as possible in all scenarios, all kind of settings that you choose. That's why we test it with totally random settings. We cannot just test it with settings that we already know that they work. That's not like a test. That's like totally biased. I don't know even how to call it, right? So we have to be serious with ourselves, and we have to create this software that makes this. And the way it worked is that I kept doing it and compiling this software and compiling, and changing this and changing that. I have like a collection of over, I don't know, hundreds of books of trading, investing, even books from 100 years ago, whatever. I'm a big collector of this stuff. So I went and look, all the Wyckoff, all these traders that were invented technical, trading and all this stuff, and try to apply the principles. And it didn't work the first time, and we're like terrible. Second time, even more terrible. Third time, terrible, but even fewer trades. So it was like getting terrible and terrible. Then a certain time, I just compile it, I test it, and I couldn't believe what I was seeing. Like really, because I was so used that, I'm not gonna create, I'm hopeless. Just trying, just because, I know that I can't give up. So I just keep doing it, but changing things, of course, every time trying to. So, but it went from a situation where nothing worked at all to when we found something that really worked, like over my wildest expectations. I would have never. I thought we could reach like 10%, profitability with randomized settings, but we reached 33%. So what does it mean? That if you're trading manually, we talked about it before, even if you follow indicators, if you follow signals, less than 5%, okay? Less than 5%. If you do totally randomized trades, so like, random, it's less than 1%. With Galileo, 33%. If you remove the aggressive settings, the super aggressive settings. If you include even the super aggressive settings, 25%. And that's like the base. That's the base. So now you have to take it from 33% to 60%, because then you're profitable, right? That's the idea. But you have this tailwind behind your back, behind your ship, that you have an advantage. If you don't use a software like this, I mean, good luck, my friend. You think you're gonna make any money just following like an indicator or even 2 indicators, and you just follow them? Oh yeah, indicator says you need to buy. Oh, I'm gonna buy. You think, really? Come on. We have to be serious. Like if it was that easy that you just follow an indicator to make money, we would already know this secret, right? So many people try to make money, like millions of, I would say even billions of people over history tried to make money in the markets, right? They would have found out before you, right? But an algorithm, it's not just one indicator. That's why it's so sophisticated, because it matches multiple indicators together at the same time. Plus, it has a series of rules that tells the algorithm, hey, this could be a fake signal, right? Don't open this trade, right? Or things like, oh, we should ignore this signal because the volume is too low, or stuff like that, right? That you don't really get from an indicator or from signals. So that's really why people are loving the robot. They're buying it like it's no tomorrow. We doubled the price twice. We're investing everything back to the company, hiring more people, more financial analysts, more engineers, more support people. So we're growing like crazy, but we're growing in the right way, right? We're growing with a product that it took a lot of, many years and many attempts to find, the sweet spot.
Who is this designed for, would you say? Is this designed for a beginner, someone that doesn't really understand trading, that needs a little bit of a helping hand? Or is this designed for a professional that wants to go to the next level with trading?
So we have both kind of clients, right? We have huge hedge funds in Tokyo. It's, Galileo is just one of the many things they use, right? We have a huge client in Tokyo. They have like 300 traders. But that's like the 1% or even less than 1%. Most people, I wouldn't describe them as total beginners. Even if we have total beginners, it's totally fine if you are a total beginner. But keep in mind, it's going to take a week or two to get started, right? It's something new, like anything. Even if you need to learn how to ride a bike, it's going to take a week or two, at least, right? So if you have to learn how to drive, this is going to take even more. So you have to take, it's just how you learn, how humans learn. You don't learn in 2 minutes. It's not that, it's simple, but it's not that stupid that you can learn it in 2 minutes, right? In 2 minutes, you can only learn something really basic in life, right? Anything worth takes more time than 2 minutes. So I would say that people who understand that, this is where trading is going, this is where the markets are going, automation, AI, you have ChatGPT, you have all kind of AI out there. It's just natural that people, they expect it from trading as well, right? You open a trading platform, you already expect right now some AI features, right? So that's really the goal. People who understand, you don't need to be tech savvy, because like installing the robot, it's not that difficult, and we have support, we have installation service and guides, whatever, videos, we have everything that you need. So don't worry about the technical part. But you need to be somebody who's not close-minded. If you still want to trade like the 90s, you're not gonna like this robot. Or if you or like if you're looking for super safe, no risk, I mean, why would you buy a robot like this, right? But if you want to be a little bolder with some extra money, it doesn't have to be much, and you want to have a consistent approach, planned, organized, logical approach in trading, then it's a good product for you. And then you don't have time also to do manual trading, because most of our clients, they are busy. They have kids, they have work, right? So they're not professionals. But still, they like trading, or they like following the news. They enjoy when they like the feeling when you make some money and you see the green profit. It makes you feel good, right? When you make money in trading, it makes you feel good. Wow, yes, I mean, feel like smarter, and you feel it's a great feeling. So definitely, it's some people, they like to go to the movies for feelings. Some people, they go to music festivals. Some people like to trade, but it's still a lot about feelings. But the feelings, guys, let's reserve it for after the trade, not during the trade or before the trade. When you make the money and you see the profit, then you can, feel whatever you want and buy a champagne, whatever you want to, enjoy life and be more, lighter. But when you are trading, until you close the trade, feelings not welcome, not welcome. That's the idea.
Absolutely. What strategy do you think maybe is seeing the best success rate with Galileo? Because obviously you could go long term in terms of your strategy, and I could put some money into an ETF or a mutual fund or something that will give me 5, 10, 15, maybe 20% a year on average, year over a long term basis. But trading on a medium term, shorter term time frames gets harder and harder. Does Galileo kind of excel in those medium to shorter time frames where people really struggle, or is there like a time frame you'd say that Galileo performs the best in?
So excellent question. This is, we get it a lot. So I'm happy to clarify a few points. So the people don't come to us and they don't buy a robot like this for 20% or even 30%. They buy it for 2000%, 1000%, because that's what you can do with trading. Because you're opening and closing multiple trades, and when you sum it up at the end of the day, it's like a lot of money, right? So it's not just a few trades that you make. You make a lot of trades eventually, if you want to, and with high risk. You can lose what you invest, right? I'm not gonna. That's life. If you don't like it, trading is not for you. So must be smart about it. Since you know that you can lose all, just put a small amount of money in it, right? Don't put 50K to start. Don't put 10K unless you're super wealthy. Put what you can afford to lose. I know it's overused phrase, but there is a reason why it's overused, because it's true. Put what you can afford to lose. Start in demo. You test different strategies. You see what works for you. We have strategies that are for the long term, swing trading, day trading. Each of them, we have all variations. We have long-term aggressive, because it exists. People think long-term, it means it's low risk. No, you can have long-term aggressive trading. You can have day trading that's moderate risk. And so we should start to understand these different shades of things. But we have strategies that you can just download and you try them and you see all the data, that's how they performed, all the trade logs, all the advanced statistics. We are really transparent about this. We built our own software to show it. And so we have everything with Galileo, right? So the idea is to make it so that people can really try different things and see what works for them. Because you may think, oh, I want to do long-term investing, but maybe you have some kind of talent. Maybe what's really good for you, it's day trading, right? If you don't try it, you never know. Just try it. You have no financial risk if you try in demo. I only advise to always test with real data from your broker, not just from the MetaTrader, whatever. Use real data and high spreads in demo, right? In simulation mode, so that you can, simulate as much as possible the real world, the real markets. You know how many times people, they test things in demo, then they go live and it doesn't work. Why? Because data was different. Spreads were different. So you need to take these things into calculations. When we do our testing, the one that I talked about, 33%, with hundreds of thousands of trades, even millions of trades, we put these realistic, things like spread is 10. We use high spreads because why would you, we're not interested in theory. This is about practical results. That's how you get the dollars, right? That then you can spend in real life. This is not like a video game where you have to, accumulate points, right? So you need to make money, real money that you can just withdraw or do whatever you want with it, invest it or give it to somebody, whatever you want to do with it, but it has to be real money.
What can Galileo trade? Can this be stocks, bonds? Can this be crypto? What's kind of at the fingertips for Galileo in terms of what it can work with?
We made it with the goal of, flexibility. So you can trade anything that your broker gives you access to, anything. So it's about choosing a broker that's regulated and licensed in your country. You're going to need a broker anyway if you're going to trade. So it's not that we have special requirements, right? So you're going to need a broker. We are not affiliated with any broker. So we're never going to tell you, oh, go to this guy because, we have like a background deal. You know how many companies do that, or they sell clients' data, or they get a commission on broker signups, blah, 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 blah. No, I said from the first day, we want to make money. We want to make revenue and make sales with a great product. We're not going to find all these, different ways of, making 100K here or whatever. That's not, we lose focus. Our focus has to be, we have to make the best product, the best trading robot that we can make, right? So all the energies, all the resources, 100% is focused on that. So we don't recommend any broker. But you're going to need a broker, right? A broker that supports MetaTrader, We have very soon, coming soon, Ninja Trader, Galileo for Ninja Trader as well, and Galileo for C Trader as well. So we're gonna, open the doors to new customers that they didn't want to switch to MetaTrader. But MetaTrader so far, even internal testing, it seems to be the best, even against Ninja Trader or C Trader. I don't know. I don't want to say, we're not associated with any of them. So even MetaTrader is like a non-profit, so they don't even do any business. It's a free software. So, but just a first impression could change in the future. But Ninja Trader, you can use it with interactive brokers. So you can plug in Galileo FX into Ninja Trader. You connect it to your interactive brokers account. Bam! Now you're using Galileo FX on anything that interactive brokers offers, and they offer like 20,000 assets. Right? They have everything, all the asset classes. So that's really what you can trade with it. It depends on your broker, but today brokers, they have no shortage. Trust me. You have the opposite problem, right? To choose what to trade because it's so much choice. So it's no problem with Galileo. We had strategies that made like 1800%. I know that I wouldn't even believe it, but it's true. Okay, you can check it out. It's of course it's one strategy out of 300. Okay, so it's not like the regular performance, but we have one that made that much in an unknown crypto coin that I never heard about it. So it doesn't really, you can trade anything. Actually, that's another advice that we can give. You should choose really carefully what you're gonna trade, because if my friend, if you go trade like Euro USD and these symbols, yes, they are good, but who's on the other side? You should ask who's on the other side of the trade. You have the biggest banks in the world, governments. These people, they have all kinds of resources, all kinds of research. They can even not move markets. Okay, they're not manipulating like that, but they can make big orders into the market where they create some kind of shocks, even unintentionally, right? If you go and trade like lesser known stocks, lesser known crypto, the guy on the other side is probably not as smart as these financial institutions. It's not on Wall Street. Probably the other guy is some kind of uneducated, or like, so it's easier to win. It's easier to win, right? So you have to think, right? What I'm gonna, if you want to have an aggressive strategy, why would you trade a stable asset like gold with an aggressive strategy? It doesn't fit. Gold is stability, right? It's like inflation hedge, central bank currency hedge. You use an aggressive strategy with things that move a lot. Bitcoin, I think Bitcoin, you can be aggressive, you can make a lot of money. Actually, if you like aggressive trading, Bitcoin is the best, because really, like me personally, I trade Bitcoin and I make good money. I don't wanna brag too much, but let's call it good money, okay? But when I see that desperation, when people are desperate on Reddit, oh, Bitcoin is gonna end, blah 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 blah, brace yourself, blah blah. That's when I buy. When I see Bitcoin on CNBC, the headline, oh, Bitcoin, it's a new record, then I just go to Coinbase and I place the sell order and I pocket the difference. You can really do it, but it's a little aggressive, right? Because I buy like on the dips, right? And then I sell. Once I waited like for a year and something. I even forgot almost that I had these Bitcoins. And I made like 30K doing nothing. Just being smart about it, right? But you cannot do that with Euro USD because it's a different economics, different mechanics behind the price. Yeah, the charts, they all look the same, but behind the chart, the mechanics, they're different. So that's what you have to be smart about it. Try to find what doesn't make sense. Oh, I want to trade aggressive and gold. You think about it, it doesn't really make sense, right? So it's really like that. You can save a lot of money, avoid a lot of losses just by avoiding the dumb decisions, avoiding dumb things.
I agree. And people invest their money in a lot of dumb things too. And that's, 50% of the problem these days.
Yeah.
So people definitely need to do their due diligence on what they want to put money in, and, based on what their strategy is, apply that appropriately. Again, don't invest aggressively into precious metals. It doesn't make any sense. Don't
Exactly.
invest passively into something that is very volatile because, you're going
Exactly.
to be on a roller coaster very quickly.
Exactly. You get it. You 100%. That's it, right? So that's really it. If you buy Bitcoin with a 5 year long plan, there's gonna be periods where you're gonna feel bad because you're gonna see this thing crashing like 50%, 60%. If that's not for you, don't do it. You already know it's gonna be like that, right? You know that. You look at the chart. You see that this thing, it has. So it just means, it just common sense, right? Common sense. Don't go to YouTube or these courses. I mean, come on, you really think you're gonna go on YouTube, you're gonna find a YouTuber, he's gonna teach you how to make money in trading? Come on. Yeah, they can teach you like we're doing now. We're teaching the principles. We're giving direction to people, but we're not giving like a set of specific instructions that work for everyone, because that's a joke. Even, that's also why we don't sell a software that is the same for everyone, because it doesn't exist. And we have to be serious. This is about money, guys, right? It's like health. It's like a health product. The way, you look at health and money, it's different than how you look at, I don't know, sports gambling or, entertainment or other products or services that you buy. You have to be serious, because money and health, you can't, you have to be serious, okay, about it.
Yeah, there's a fine line between, investing and gambling for a lot of people. And it really just, comes down to, a simple, do you understand what you're doing? Like gambling, it's like you're taking a chance at something, whereas investing, it can be very much like gambling if you're just taking a chance and throwing money and saying, hopefully something good happens, versus, actually having that strategy in place. So everyone out there, make sure
Exactly.
you have a good strategy into
Risk
your due diligence.
and risk comes from not knowing what you are doing. So that's exactly what you said, right? So even if you know what you're doing, you can still lose money. But at least now, when you lose money, you have information, and you can use that information to make it work next time, right? I tell you, it's exactly the same as when you're looking for a house, to buy a home, right? Or when you're looking for a partner. When you find even the right person or the right house, you still have to make it work for you, right? It's never gonna be perfect. You still gonna have some. Yeah, maybe I have to fix this part. I don't like this. This room I can use it for this other thing. It's never gonna be perfect. Same with trading strategies, right? So, but when you see it, you're gonna know that's the right thing, but it's never gonna be perfect. So it takes some polishing. It takes some, working. That's you shouldn't just try to find the magic key. Doesn't work.
I want to ask you a question here about the market here before we start to wrap up the episode, because there's a lot going on in global markets these days, and I'm sure people are going to be very curious to your take on this as well. But obviously, we have a new administration in the U.S. We have two wars that are going on in the world that are quite significant. There's a lot of global tension. There's tariffs. There's all these things that are kind of rattling markets and really throwing things off, and even things that are inversely related, like the DXY and the dollar index compared to the S&P and the NASDAQ. It's like everything's just kind of dropping from the sky right now, and there's so much uncertainty, like we talked about at the very beginning of the episode, that everyone's like so on edge about what to do. Like, is this a good buying opportunity? Is this temporary, or is this the beginning of a larger, bubble starting to pop and economics are starting to crumble? Again, that uncertainty probably hasn't been higher than it's been since 2008 when we had the recession. And in some ways, it feels
Mm-hmm.
like maybe we are overdue for that. At the same time, you could argue maybe this is temporary and it's just a growing pain that we're going through. But I'm
Mm-hmm.
curious, I'm sure other people are, as an expert on, looking at these markets and analyzing things, what are you seeing and what do you think is the most likely scenarios here?
Okay, so I'm gonna keep it use simple words. I'm gonna avoid any technical stuff so that we can follow it well. But so You see now it's like clear to anyone that any time there was an announcement about tariffs or a tweet or some like breaking news about tariffs, the markets just dropped. So the markets, now it's clear. You can't argue with the fact that this is a fact. The markets don't like these tariffs. You can't argue this. Okay, we should start from this like as a first point. So now we build on this. Okay, so the markets don't like these tariffs. Why? Why are the markets not liking these tariffs? Number one, because the prices of the companies, all the prices in the market, all the assets, they were priced for a world without the tariffs, right? Yes, there was some indication we're going to have these tariffs, but it was speculation until, actual executive order is signed or some law is passed and it actually becomes, actual law. Yesterday, we had, a couple of days ago, we had the Liberation Day. That's how it was announced, and that the markets, they didn't like it at all. So this is could be that the markets are wrong and Trump is right. That's actually what the White House is saying now. Hey, trust Trump. We're gonna have this short-term pain and long-term benefit. But we have to go backwards. Okay, here, Brandon. Why is Trump focused on these tariffs? Why does Trump? I mean, he's not making money himself, right? So what's the reason behind these tariffs? And the reason is interest debt payments. Okay, the payments for the interest for the U.S. debt, the federal debt, they are higher. I'm sure everybody knows about this now. They are higher than the defense budget. The U.S. government needs the money to pay this debt. There's no way around it. So one way, you print more currency. Either, you print it like physically, but when I mean print, you just create more fake money, which is US dollars. They're fake money, right? Because they're not backed by anything, just by, yeah. No, even worse than that, just like they did it during COVID, where they like literally printed money and just wired it to people, right, to companies. So when you print like 38%, which is, I'm talking European Union, but I'm sure the US is going to be the same. During the last 5 years, the increase in money supply, it's 38%. And you're going to tell me that inflation is transitory? Even if you have 3.8% inflation a year, it's going to take 10 years, right? Yeah, you say, oh, but we have growth. We should discount growth from this. Yeah, but you're not growing 3.8% or 4%. You're not like China or India where it's like they're growing like, shoom. No, the US is not growing that fast. So they need the money because they printed all this money before, okay, this fake currency. Now they need the money to pay this interest debt, but they cannot print more money right now, right? They can't print fake money because they already print enough. They can't tax people even more than what they're taxed. I mean, every time I go to the US, everybody I talk to the US, if you put 10% more taxes on people, things are going to break. They can't pay more taxes than what they're paying, right? So Trump needs the money. Not Trump, the US government needs the money. How do you get this money? He did the Trump, card with $5 million. You get the citizenship. Oh, if we sell 1 million of these, we're going to make $5 trillion. Not so easy to find like 1 million people in the world willing to pay $5 million just to get, a piece of, a passport. It's a lot of money, like 5%. You're not investing like 5 million. You're just paying in exchange for this citizenship. That was the idea. And they got like 1,000 or 2,000 people doing it. So it's peanuts for the US government. The tariffs, that's real money that it's coming like now, like already coming probably, right? They're already charging these tariffs. So it's money that's coming into the bank accounts of the US government. So they can pay this interest, on the debt that they borrowed. I mean, the past administration, they borrowed trillions of dollars. And these dollars, they didn't go to productive, things like a factory or something that produces more goods and services. It went just to waste, just to handing out to people. Then, of course, prices they're going to raise. Why? Because you have more currency units chasing the same number of goods and services, right? If the number of goods and services is the same or pretty much the same, and you print 40% more fake money, prices, they're going to go up because just more fake money chasing the same number of real good products and services. So they printed this money. They didn't allocate it in such a way that it would stimulate production, right? They just, oh yeah, let's give, I don't know, 100 million to this whatever DEI project, or 100 million to this other agency nobody ever heard about, another 400 million to this NGO. Who cares? It's just taxpayers' money. I mean, that's crazy. It had to stop, right? And that's also why I think Trump, I'm not taking any political side, but I think that's why people, they had enough. They understood something goes wrong. Like we getting all this debt, and my life is not improving. Where is all this money going? Why I don't live a better life if we print it? Why don't my life is not 40% better? And my parents' life is not 40% better, but we printed 40%, more US dollars. So you see the point. Now it's almost an act. I'm not gonna say desperation. I'm not gonna use this word, but these tariffs, they're needed. So they would rather crash the market and get the money from the tariff to pay this interest than keep the market up, and then they don't know what to do, where to get this money, right? But in the end, I was thinking about yesterday. If you think about it, who's losing money in the stock market? Almost everyone, but mostly like wealthy individuals, right? So when they said, "Oh, but Trump, he's a friend of the billionaires, he's a friend of this," I mean, are you sure? I mean, these people, they lost more money with Trump than with any other president, like, because they have all their money in stocks. Like if you think Tim Cook, Jeff Bezos, Mark Zuckerberg, Elon Musk, all their money, all their net worth is in stocks, and stocks are doing really, really bad, really poorly with Trump. So because of the tariffs, so it's a lot of things are not as they see. Trump, he wants to make like the moral argument. Oh, these countries were taking advantage of us. Yeah, maybe it's also somewhat true, but economics is not about who's right, morally right. It's about numbers, it's about commerce, it's about people exchanging things, goods with each other and services. So it's not time, it's not philosophy here, okay? Don't make it more serious than what it is. Keep it simple, right? But that's my point of view. So that's really, and once you have the official confirmation that these tariffs are actually real and they get approved and they're official, then you see panic like we're seeing in the last 2-3 days. Everything crashed. Even oil, it crashed like 7-8% in a day. I mean, those are huge movements. But let's say you shorted the market before Trump announcing these tariffs, you would make like millions of dollars right now, okay? So it's all about how you play, each move in trading. It's not really about, oh, but now things are going bad, so I'm not going to make any money in trading. No, that's really not how it works. Actually, it's bad to say it, but if things go bad in the world, unfortunately, it can be better for traders. You have more opportunities to make money. It's bad, but we're not making judgments here.
Yeah, I think you're spot on with your point. If we extrapolate away all of the politics, all the emotion, and you look at the bare bones of, like, for example, what tariffs are, and you compare it to, again, the US is not an average country, 350 million people, a giant continent almost, aside from Mexico and Canada, the US almost takes up an entire continent. The average country size is much, much smaller. And, I live in Colombia, and Colombia has tariffs, taxes, whatever you want to call them, on other countries and imports coming in as well. And it hurts the population here, largely because the people on average are very under the line of, what we would consider in the US a average income, middle class, very lower income in Colombia. And the disparity is very large for those that are in upper class in Colombia. So it hurts people very much here when prices get jacked up for t-shirts and food and furniture, anything that's important to the country. But again, you take that same, financial tool, a tariff, and you apply it to a larger country like the US, for example. And this is where I think a lot of people get it wrong. It's the US, economy can stomach something like that. It's a capitalistic society. It's a really big country, a very, very large middle class that can afford some of these hits if they do get passed on to the consumer. But at the same time, if they choose, in a capitalistic society to buy a different product, that's only going to hurt the manufacturer. So I think a lot of what's happening in the market in terms of the reaction to tariffs is it's exactly that. It's a fear-based reaction that I think is getting priced in right now. And you're seeing that, look ugly in the market, but in reality is I think it'll settle in for people and they'll realize, the difference isn't, that much for an American citizen because of the unique position that the economy is in. Um, and I don't think that's the real issue. I think the real issue is the fact that interest rates in the US are so high that dollars are just so expensive. um, and again, this is, why Trump is kind of banging the drum here on trying to get interest rates cut by the Fed. And Jerome's, really kind of pushing back on it. But, as soon as those interest rates get cut, it's going to alleviate a lot of this, pressure, downward pressure that's on these markets. Even in crypto markets too, people wondering like, where's the bull market? Why isn't anything going up in 2025? Like it's the 4-year cycle, and it's atypical because those interest rates are so high. It's like you're taking a good market, in a relatively strong economy, and you're like strangling it.
Yeah. Definitely. Yeah, I see your point. Yeah, I see your point, definitely. I tend to agree that never bet against America, right? I mean, America went through so many different things that this is nothing compared to what, if you look at history, like world wars, pandemics, the Great Depression, you had it all, right? Now it's still strong, right? It's still the strongest country in the world. They basically won the Cold War against the USSR, right? So never bet against America. But this doesn't mean that it's going to be solved quickly, right? I think the point here is going to take some time to adapt, because if you really think about it, if you have to move production like of a auto factory that builds like cars, you're not going to do it like in a weekend, like you're moving from an apartment to another apartment. It's not going to be that simple and quick and easy, like to hire 20,000 factory workers, managers and everything, get all the permissions, actually build the whole thing. It's going to take years, right? So that's eventually, I think Trump is right in the long term in some things with these tariffs, but short term here, remember when the Fed said, "Oh, inflation is transitory." I think this is one of those things that they may look short term, and I hope it's short term. But when you look at the numbers, I don't know. They need to find this money. Okay. So one other idea that I had. I mean, this is more not that I had, but why does Trump wants Greenland so much, right? Because if you have the same debt, but now all of a sudden you have more assets. So you get Greenland, you get these trillions of dollars of rare earth and minerals and whatever. You can build airports. You're gonna rent it to the military and whatever. Now you have more assets. So you can afford more debt because you have more assets that before you didn't have. Ukraine, the rare earth minerals is the same. So I wouldn't be surprised. I know it's gonna sound crazy. I wouldn't be surprised if the U.S. makes a huge war to get out of this debt and gets, they conquer some place, because that actually makes sense, But eventually, also that, it has a limit. You saw it with Rome, like the empire, it cannot grow bigger and bigger and bigger and bigger. At a certain point, even if you grow bigger, then it becomes out of control. But so it sounds crazy, but that's really how it is. They have to fix this situation with the fake money that they printed in Washington. That's where they printed it. I don't have anything against regulators or bureaucrats in general, because you have great people working there. You have idiots working there, like in any field, right? Even on Wall Street, you have the idiots, you have the geniuses, you have all kinds. It's just people, right? So, but in general, you want to point the finger, who printed this fake money? I didn't print it. Regular citizens didn't print it. Companies didn't print it, okay? Somebody in Washington printed it, okay? Why? Because of political pressure, where we have to have these programs or whatever, or we have to give money to people. Just print some money and give it to people. That's recipe for disaster. You destroy a country. You destroy a country like that. That's why Trump, he was saying that inflation, he can destroy a country. He's right about that. I mean, Trump, he knows about economics, right? He really knows. He understands it. But that doesn't mean that it's gonna be without pain. You know, it doesn't. You still have the pain when you make these huge changes. But markets could be overreacting. I agree with you on that. Okay, so markets could be overreacting. That's why it could be a good opportunity to buy right now, especially stocks that are solid or assets that are solid. And you see Bitcoin, it's 82, 80. What does it mean? That you have like a huge community of people who really believe in Bitcoin. They're not gonna sell. Whatever happens, they're not gonna sell. So the hodlers, they're actually growing, in my opinion, because yeah, you had a huge swing of Bitcoin, 20%, 15% drop from the highest. But compared to the past, I mean, the drops, they were much higher. I remember watching it live. Once it dropped the first time from 16,000 to 9, it was like 45%. So now it's got like the biggest, you know, change is like 20%. And you have all this mess happening. So, I'm not pro Bitcoin. I'm not against Bitcoin. You know my philosophy, right? It doesn't matter what you trade as long as you make money. Some people, they trade vegetables and they make more money than some traders. So it doesn't really matter. Yeah. It doesn't really matter what you trade. But in general, if I look at Bitcoin, I'm surprised that it's still here and you have this community of people and it's growing. It means that, there is some value there, okay? There is some kind of value. It's not as worthless as maybe I thought, even myself, right? But I'm not saying I'm not becoming pro Bitcoin or like faith, Bitcoin faith guy. Here is no faith. Don't fall in love, with the asset.
David, this has been a really good episode and a really good conversation. We've been going for a while. Where can people go to learn a bit more about Galileo? How can they get started, get it set up? What do they need? Where are the best resources? Where would you direct people?
Just go to GalileoFX.com. That's where you have, the introduction to the software. We have like a video, 2 minutes video. Very simple. It explains you what it does, what it doesn't do, why you should use it, why you should not use it. And if you like it, if you're interested in it, we have live chat with, we have real people 24/7 answering on chat. You can chat with them. They're great people. They know everything about the product. They can explain anything and everything. Or you can even book an appointment. We have people in the US, salespeople in the US. You can book an appointment, do a call with them, ask them anything. You want to see a demo of the software, whatever, before buying it. Or if you just want to see the features, we have all the pages, the FAQ page, pricing page. So, but the advice is just go to GalileoFX.com. That's where, you start the adventure.
Awesome. We'll put all the links in the description for the episode below so people can easily find all of it. I'm definitely going to be checking out myself as well. I'd like to start implementing some of these strategies and completely extrapolating away my emotions. So I definitely will be looking into it. But no, this has been a really good conversation. We got into a lot of different things in relation to both Galileo, but also what's happening in markets right now and what's happening in the world and what's affecting global money right now. So I'm definitely excited to share this with people. I think people are going to really enjoy this conversation. So appreciate it, man. Thank you so much for taking the time today. No, you're
Thank
busy
you
guy.
so much, Brandon. Thanks a million.